Hey folks, and welcome to the Pipnotic Symposium for the 13th of May 2019. Today we are going to talk about order blocks. And so first of all, what is an order block? Well, an order block is unfilled orders in the market, which is essentially what is making the price of a commodity move either higher or lower. So price can typically move easily through thin liquidity, in other words, the absence of order blocks, and it will generally stop or slow down once it reaches an area in the market with thick liquidity, which is these pending orders, limit orders, or stop orders, or in any way an unfilled order. And so you can either find these order block data, find this order block data on the internet using, for example, Forex Live or some other premium service, or you can use the price chart to tell you where they are. And I prefer to do the last one just to simplify the whole process. But if you're interested in using premium services, you can get order block information. You can actually paste these into the Pipnotic software, and I'll just show you how to do that very quickly. So if you open the Pipnotic Supply and Demand software, you scroll down, you'll notice that there's a section called Orders. And here you can simply paste in the order information that you are getting from these premium services. So let's assume for a second that you have an order block that is, let's say, where are we? Let's say 70 to make it easy. We have an offer, and the bids we have 0.65. Let's enable these. You can paste them in here. And remember that if there are multiple order blocks, they should be separated with a space bar, and you can see that here. See the small space in there, because this will be the delimiter that is placed between the order blocks. We have 0.7 space 0.75, and for the bids we'll have down here, we'll put a space 0.6. Okay, so then we say okay, and the software will read this information, and then it'll plot this data for us on the price chart. So here we have our 0.0. This is our offer up here, and the bids are below price. I think I typed them in wrong because they're not always showing up. But that's pretty much how you're doing it. It's very simple. So you can get the information and you can put it in the software, and the software will show that information to you on the price chart. Let me disable that. False. Good. But what I like to do is I like to use price instead. This is kind of the whole methodology is based on just looking at price and not paying too much attention to much else. Okay, and you can see that here we have a really interesting area. Why is this an interesting area? Well, you can see, we zoom in, the price went up to the area, and it moved up, it moved sideways, and then it left very quickly. And you can see that we had a period of agreement, and so price moved up into an area, price level that people were very keen on paying a price for. You can see that we had some trading in there, but this agreement in price was very short. So it was such a good deal, it was such a high price to sell at, the price didn't occupy this price level for a great deal of time. It left very quickly, and the fact that it's moving up, it's moving sideways, and then it's leaving quickly is telling us that we have a bargain price for this commodity, this price level. So we can expect that the next time price goes up to the area, that we're going to see the same or other market participants engage in the market at relatively the same area. And you'll notice that price often doesn't get to the area, and this is because if price leaves as quickly as it did here, people are going to get in at just below the area because they're worried that price will not fill their order. So they start to cascade their orders in and around these price areas, starting from typically the lows of the accumulation that we can see here. So for this accumulation, you can see, let's leave this one out because this is a very volatile price point. So we have from here, and then move up like this, and they'll start cascading their orders in and around the area. And now we're getting into the volume, the high volume, and it moves up like that. You can see for this example, the price just barely penetrated the lows of this area of accumulation or the sell side distribution, and then price moved away very quickly. Do I think price will bounce once again? when it reaches this area, I do. I won't. This is not a set and forget trade, but due to the fact that price didn't even enter the area, it just kind of reacted at the perimeter, the edge of this area. Well, I'll definitely be interested in trying to sell once price gets back up to this area. Okay. Let's see if we can find some more examples. I have quite a few orders put in. Here we have another one, and this is a daily one here. You can see how price came down, we moved sideways, and then we had this day of buying. I mean, there was nothing but buying this day. It was a very, very strong push higher, and I really like that, because this is telling me that, yeah, here we had a really good price. This was a discount for the pound, the British pound, American dollar, and so people were very keen on buying once price came up to this level. And so this area, this window of opportunity is still open, okay? And so essentially you want to be looking for places to buy at this price range from where I have my entry to where I have my stop, which is just below. Okay, and you can see here, you find the low. I mean, the high probability areas to trade at are going to be the swings. Okay, so if we draw, we have continuation patterns. Price moves higher. Oops, wrong thing. Price moves higher, moves sideways, and it moves higher, sideways, higher. These are lower probability, and the further you go to the top, to the major turning point, the lower the probability. So this is low probability, this is medium, and this is higher. The highest being the turning point, which you can see here, So the major fractals, okay, or swing points, not fractals. And so if you say that at the top we have 0% likelihood of the trade working out, which is pretty much where we are, and here we have a 95% chance of the trade working out. Essentially, you want to be looking in the lower half of the range here. And while price will certainly react here and here, the higher probability trades are towards the lower area, which is essentially approaching the origin of this move higher. Okay, so this is good. This is good. This is lower probability. Here we have the higher probability, lower probability. We moved into around to the 50% area. This is where price bounced. And so moving up, we are approaching the higher probability areas of supply that we expect price to react. And price touched upon this nice area of supply. And where did it turn around? Well, look at the pattern. Price went up, we moved sideways for a short period of time, then we had a very sharp release, a move away from the area. And so what does that mean? Well, that means that this price area, this is a child, this is a parent, was very attractive. Buyers and sellers thought, great, this is a nice area to get involved in the market. This is a discount price. And so this is where we saw an influx of sellers into the market. And so here we have price returning to the area. Price rallied, moved sideways. We had a sharp cutaway. So the entry for this would be here. You can see this one is the one that moved away. Is this an accumulation candle? Yes. Is the range of this candle within the within the body of the previous? No, it is not. And so for this one here, the area would be from here to about the high, so just around there. Okay. Sometimes, as I mentioned in the previous one, price will rarely come up into the thicket. It'll often just bounce at the perimeter of the area. And you can see that we have kind of the wicks here. Another little trick that I like to do is I sometimes like to put on the line chart like this. And then you just kind of like mark off kind of like the low. Here you can see that price went up, we had some closes, it went up, and then it went down. And if there's no clarity there, you go to a smaller time frame, and you can look for more value. And you can see that here we have a pretty nice one here. If we move the bottom end of the triangle or the rectangle here, at a touch here and a touch here, and then this is probably the close of this candle probably went down here. We turn this on. Yeah, no, it didn't. It became close. And so this is probably a pretty decent area to look to sell at there. We go back, yeah, and this is pretty close to where price actually did turn around. We had a bit of penetration before price moved away, and so just a really nice area there. And what do we have now? Well, here we have a lower probability area of demand, and this is lower probability. Why? Well, because we're in the middle of the move. So I just mark this off. Here we have 95% likelihood. Here we have 0, which means that buying anywhere in here is a really bad idea. Okay, and price just didn't race through it. We have 50%, which is here. So the only area that you would maybe consider to buy at is this one here, like there. Price went through it, just below it, and then we kind of found some buyers, and then price is now kind of busy consuming all the liquidity available in this area here. Okay, and so this is a little bit further down. Here we have about maybe the 75% retracement. So 0, 25, 50, 75. And this is getting towards kind of the lower range. So it's certainly within the 50% move here. Okay, and this is, if we have a look at the higher time frame, let's see what direction we're going in. So if I go like this, you can see that price has reacted on this. I'd be much more happy about taking this trade if price had not been up here. But this is fresh, this is below price, this has been tested, so price is going up, and now we're returning to the origin, close to the origin of this push higher into this 4-hour supply, and now we're looking to come down to here and do something. We don't know what. Okay, so I think that this is looking all right. I'm thinking that we'll probably move a little bit deeper into this area, looking on the daily chart, and potentially come down to, here. So you go like that, or you even take the lows of this accumulation. But because the body of this candle is in the range of the previous, I'm feeling more inclined to do this. And because we have a big wick here, I'm feeling more inclined to do this. And so I'm pretty comfortable kind of putting it around there. But I have a really good feeling that it's going to move deeper into this area here. Okay, so let's do another example. So we'll move them both like that, and we'll wander over to the dollar Japanese yen. And what do we have here? Well, we have a trend line break, so market structure is failing. We're starting to break down. And we have one of those things here, how price went up, we came down, we moved sideways, then we had a sharp release. Looking on the 4-hour chart, let's see what that looks like. It looks like this. Our price came down and then it left. And so we had a really strong, we had an attempt to move prior and then rejection. And so looking at this, it looks pretty interesting. We have 1, 2, 3, 4, 5. I'm thinking price will probably go here-ish, maybe around here. Because price came down, we left, we moved sideways, we poked into here. This is kind of the beginning of the buy zone, and then we shot up. Okay, and so this is the bottom of the area of accumulation, and this is that major low or medium-term low that is looking pretty interesting. Okay, and so I'm just looking for those little areas. Here we had price move higher, move sideways, and it left. Where's that big candle that left? Or the big candle that left is here. The origin of it is right there. You can see here, price came up to it and started to form these higher lows, which is a warning that price is going to push deeper. And price finally managed to move up here, which is, if you look at this little structure here, price went up, down, up, down, up, down, up, and then down. And so price returned to the area that is the origin of the release. And when I say the origin of the release, let me zoom in a little bit. You can see that here we have like a clear swing. We have like a little pin bar, and price moved down away from this. So price is essentially returning back to the depth of the slingshot. So you have, for example, a slingshot like this, and you have the elastic here and here, and you have the pouch like that. The slingshot was pulled back to here before it left. Okay, and so this is telling us where we have a high activity of trading. So here we have a keen interest on selling here. So this is a good price. This is a discount price for this. or a high price for the sellers, and so people are going to look to sell there. Okay, and we have the same thing here. We have the same thing here because you want to see kind of the clear swings. That's why I'm always talking about these clear swings. Where are these clear swings occurring? When you have them here, we have one here for the longs, and we have one here for the shorts. So just focus on these. We'll bring our attention to the beginning of these buy and sell zones. Cool. We have one here. This is a little bit messy, but you can see the price move sideways. We moved down, so we had agreement, and then price cut away, and we gapped down. I mean, this is a really strong move away here. So this might be an interesting place to look at. Let's look at something else, the dollar franc. What do we have here? Well, let's go on the bigger time frame because I can see that that's where we need to be. So we had price push down, move sideways. We had one period of accumulation, and then price rallied left. This is interesting because when I look at this right here, I think that this looks like a nice area because there was only one period of accumulation, only 1 week. Okay, so this is interesting. The 99.50. Down here we have this one here. Is this interesting? It is, but the wick, the really big wick, is just begging for a deeper look into the wick. So you go to the daily chart and you have a look and you say, what do we actually have? And then you say, okay, here we have it. You see, here we have the slingshot being pulled back and then it releases. So we went from having an entry like this to an entry that looks like that and save a few pips. Go back to the weekly, you'll notice that we're actually pretty far into the wick. Here you can see it's actually the edge of the buy zone is the lows of these accumulation candles in this price imbalance candle. So if you go to the 4-hour chart, you'll probably be able to go a little bit closer, and you can see that here we have this. We had the big push away here, but the candle that left the area is this one. So here we have the base. The base is here. It's here. Which candle left? This one did, right there. And so for us, I'd feel more comfortable doing something like that, even though it's really messy. I mean, you have the volume of the trading here, in here. This candle left. How far did it go? How far did it pull back into this area of demand before it left? It pulled back to here. So this is the beginning of the buy zone for this area here, and this is also a major low. You have price leaving, moving sideways, and then it's moving higher. And what did price do here? Is this a valid a trend line point? It is, and why? Because we managed to move above these highs here. So what area did that? Well, we have this one here, this one here, and this one here. This is interesting down here. I should prefer this one here because if you look at our boom, 0%, 95, 50 is about here, not even, a little bit lower, 50 is here, so we have 50%. So I want to look to buy down here. I don't want to buy here. I don't want to buy up here. I only want to buy down here. Okay, sorry. Go like that. I only want to buy down here. The price is having a bit of a muck around there. It's reacting to this micro pullback here, this like little tiny slingshot, which is pullback to here, which is where it's looking at, and this is pretty close to the 50, but I'm not interested in that. I'm interested in looking lower, so that's what I'll wait patiently for. Okay, so that's pretty much what I like to look for. I think that if you look for those big swings on the daily, okay, so put two on there. I have my daily, and then I have my hourly over here. I'll say, where is price now? And so where do we have rectangles? Well, they are below price, which means we have demand in control. We have something going on up here, so price has reacted. The interest rate differentials, they are bullish. You can see that we're earning some money when we hold this pair long, and we are hemorrhaging a lot of money. I mean, $11.24 per standard lot per day. So that's a lot, especially if you're trading huge positions. It's a really expensive situation to be in. So be mindful of that. We have a look here. What do we have? Where do we have that pattern? You can see we've got that pattern. Let's go. Let's start here. What do we have? We have that pattern here. This is a really clear pattern here. If we extend that into the future, let's move into the future like that. Price gap down until we had a bounce. What area of supply took this one out? Well, we had this one here is actually the one that did it. So price cut through it, and price came back to that area, and then we started to move away from here. Then we left, and now we're moving back up, and we found some sellers, and our price is drifting lower. And so you can see these pretty easily. So if we look, we have one here. Oops, wrong thing. I want to be clear. We have one here. We have one here. Yeah, that's kind of, there's nothing, there's a lot of, I mean, there's no drop, accumulation, drop. This is kind of just price moving, so there's nothing in here that's interesting to us. So if we go to a different time frame, we'll have a look. What do we have? Well, we have this one. This is nice. I like that. Price went up, we accumulated, and then we sold quickly. We have this one here. We have this one here, which has been tested. We have this one here. This is a lower probability. We have this one here, which is again lower probability. And below price, we don't have anything. And so if we go to a daily time frame, where do we have the same things? Well, we have this one here. It's a pretty big one. Price where price is now. We have this one below it. We have this one. Okay, we have this one here. Price has not been back to this one here. We have this. We have this. Okay. We have this one, this one, this one, and this one. Remove those. So we have this one here. A little bit messy. Looking like that. So you can see that there's a lot going on. There's this little one here. Lower probability. Price came up, down. Okay, so just look for this price going up, then going away quickly, going down, and then going away quickly. Okay, so maybe for a sample size, go to the 1 hour chart on any chart, the Aussie CAD, whatever, and just look for those. Look for the slightly bigger turning points. If I circle them here, we have this one. We have this one, which is messy, but so if you look higher, we have this one here. This one's still orange here, which means it has not been violated. So we have this here. We have this. We have this here. And below price, there's nothing. And so we can expect price to continue moving lower on the hourly chart. Then just mark those off. You can use the supply and demand software. Let me remove. Okay, so then you can get the indicator. You can go, I want to see this one here. I want to try this one here. And just mark them off. Don't trade them, just mark them off and leave them. And here we have one. This is a bit messy, but you can see that if you mark off the whole area, I mean, it looks like that. Okay, from the lows as well. This has already been tested. And this one here has not been tested yet. It's also pretty messy. And so actually it has the bottom of it from the lows to the highs. It's kind of been tested here. That's a bit of an ugly one. A bit of a meaty, bit of a chunky area of supply. Yeah, just mark those off. And as a matter of fact, you can even go to the 50-minute chart and do the same thing. So you could do that as well. Let's have a look here. So what do we have here? Well, we have this one here, which has already seen a reaction. We have this one here, which has not seen a reaction yet. We had one above it. No reaction yet. We have this one, which is messy. So just mark them off and see what happens. See what happens when price. I mean, this one has been tested once, twice. On the third time, price cut through it as expected. This one is untested, so this one is still still good to go. This one here. Okay, there's a lot of trading. Price didn't really care much about this area back here, but all of a sudden there's a lot of selling. What does that mean? That means this is fresh supply, and price is driven lower. Maybe some news driven as well. Got to be careful about those news driven areas, but I mean, this was like kind of a fair price for this commodity once price broke away. Price left all of a sudden, so I'm assuming once price moves back up into this area here, that we're going to find some willing sellers to step in and to move price lower. Okay, I mentioned you can do this stuff using premium services. You can even buy order block information or market depth information from premium service providers. I don't use them, but I know if you Google order blocks or market depth, premium market depth, then you can get this information, and you can take the price levels and you can put into the Pipnotic supply and demand software, so they're on your charts, which would be quite nice and very handy. So I recommend that you have a look. Essentially, you have to try many different things and find out what works for you and stick to that. Because the way I trade is, I mean, that's how I trade and that's how I like to trade, but it doesn't mean it's the right way for you. But I'm hoping that you'll use the tools to help identify the path that's most beneficial to you, and essentially the path that's most profitable and you're most comfortable on walking. Okay, cool. Well, I'll leave it at that. Short, sweet. Have a lovely day, and I'll get you in the next video. Thanks.